remotely. The amendment to the Brown Act 2449. Chief Weber, is there anyone under the age of 18 or over the age of 18 in the room?
No, there's not, but I also can't turn my video on. It's blocked.
We'll fix that.
We'll fix that in a moment.
Thanks.
With that, we'll do roll. Director Finn.
Here.
Director Goins.
Present.
Director Hilliard.
Present.
Director Kurtz.
Here.
Member Schwartz.
Here.
Chief Weber.
Here.
Here.
Attendance.
Great. Thank you very much. Any agenda adjustments? No. Okay. Open time for public expression. Public is welcome to address the Finance Committee at this time on matters not on the agenda that are within the jurisdiction of the committee. Please be advised that pursuant to Government Code Section 54954.2, the committee is not permitted to discuss or take action on any other matter not on the agenda. Comments may be no longer than 3 minutes and should be respectful to the community. Please silence your cell phones during the meeting. Mute your microphone when not reporting out.
At this time, it's time for public expression. If anyone wishes to speak, please unmute yourself or press *9 to be unmuted, or *6 to raise your hand. *9 to raise your hand, *6 to be unmuted. Sorry. And at this time, we do not have any raised hands.
Okay, great. Thank you. Moving on to the consent calendar, we have one item to the minutes from our May 8th meeting. Any comments, questions? Nope. Should we open to public comment on the minutes?
If you would like to comment on this, please raise your hand or press *9 to raise your hand and *6 to unmute yourself. And we have no raised hands.
Okay,
Move to approve.
thank you.
Okay.
Thank you.
Second.
All in favor?
Aye.
Hi.
Fortunately, we do have one person remote, so we have to do a roll call.
Oh,
Hey, thank you.
Thank you, Jason.
I owe you guys.
All right. Would you like to do roll call, please?
Yes. Director Finn.
Aye.
Director Goins.
Aye.
Director Hilliard.
Aye.
Director Kurtz.
Aye.
Member Schwartz.
Aye.
Chief Weber.
Hi.
And Director White.
Aye.
All right,
It's approved.
very good. Officially all approved. All right, moving on to the executive officer's report.
I'll be very brief since we had a fairly detailed executive officers report at the exec committee, and we will have another one at the board meeting next week. I'll just kind of focus on stuff that's finance related. And the Citizens Oversight Committee did approve their report for fiscal year 21-22. I've had the opportunity to go through it and prepare my staff report, which we will present to the executive committee in November, with the plans to bring it to the full board in November as well. COC's got a really good start on their new report for 22-23. 21-22 was a little bit of a challenge because it was the first year that had a full work plan under the core budget. So they had to amend some of their practices. And now that they've got those practices dialed in with a full report, full work plan, we feel like they'll be able to get going better. And the MWPA has also modified the way in which it delivers the data to the COC. So we believe that the workflow should be a little bit better for this current one. And with that, I'll move on to questions.
Thank you, Director. Any questions for Mark on either items he mentioned or anything else? No? There we go. Jason, you're all good? All right. Okay. We are now moving over to our action items. Do we need public comment on executive officer? Never can remember.
We typically do.
Yeah. Is there anyone? Any open for public comment for on the executive officer's report?
If anyone would like to make a comment, please raise your hand, press *9 to raise your hand by phone and *6 to unmute yourself. And we have no public comment.
Okay, great, thank you. So we were just asked to put up the participant list so for those in the room can see who's attending virtually. Great. Thank you. Okay, moving on to our action items. End of fiscal year 2022-23 closeout and general fund rollover. Who gets this?
I'll start it off and then Lisa will tag in onto that. So this is our second year of having a full work plan built out in the core budget. Very robust work plan that was built. And I'll give away some of the information before Lisa has a chance to do it, but we're actually really pleased with the amount of production that we had this year. As you remember, we had about $4 million of rollover in core funding last year. Some of it was planned, for instance, the evacuation, ingress, egress risk assessment we knew was going to take multiple fiscal years to conduct. So we had planned on that rollover. Several other projects, there was just not the bandwidth within the organizations to complete some of the projects. Some of it was getting through the environmental compliance process. Not that we've been inefficient, but we had a lot of projects stacked up and we had to get down to them. So we had some planned rollover. Some of it was due to still building bandwidth within our member organizations. So like I said, $4 million of rollover, which made last year's budget about a $15 million core budget. You'll notice that we're proposing 3 million and change in rollover this year. However, that doesn't really reflect the true amount of spending that we had. That 3 million in rollover is because of 2.5 million in grant reimbursements from the CAL FIRE grant for the Greater Rock Valley Shaded Fuel Break. So in reality, we burned through all of our core and 3.5 million of the rollover that we had from the last fiscal. We're one of the rare agencies where we actually want to expend the money that we bring in because it is a sign of the effort that we are putting out on the ground. Obviously, we don't want to spend that money frivolously. We want to make sure that we are doing on quality projects, and we feel that we have done that. So when you see that 3.5 million rollover, I wanted to put a little context to that it really is that we spent almost all of our core and the rollover. We just had the benefit of a 2.5 reimbursement and grant funding. In reality, over the next fiscal year or two, if we are not successful in our grant acquisitions, which we are getting very aggressive with our grant applications right now, we may actually have to slow down some of our work. So with that, I'll pass it off to Elisa.
Yes, good morning, everybody. Just to piggyback on Mark here, the agency did spend a lot more money than we did last year. In fact, if you look just at our operating expenses, which is the revenue and interest minus operating expenses, we spent 1.1 million more than we took in, which is great because we had rollover from the prior fiscal years. And so I don't know what page numbers you have in your packet there, but we did need to use 2.3 million of prior year rollover funds. And you can see that in the fiscal year 23 final budget report. And one thing I did want to point out, somewhere during the budget amendments last year, I did accidentally reduce the budget for local agency payments. That shouldn't have happened. I've definitely taken some measures so that won't happen again, but it shows that local agency payments were over budget because we weren't going to change what we paid the agencies. So the agency payments were 20% of the actual Measure C revenues. Does anyone have any questions at the moment? Feel free to just stop me if you do.
I do.
Sure.
So you were giving us all these numbers, and in our packet, we have, the beginning is a staff report. It has a, at the bottom is a box that says FY23 budget category, and then actual, and then budget. And then you talked about last year. It's on the next page, which is page 9 with graphs. Could you please
Mhm.
tell me, other than the narrative that says analysis, the 2.3 million in general fund balance, where that would show up on our sheets here? Do you know?
Yeah, so if you look at I'm on the page with the graphs,
Yes.
and then go to the next page and go to the next page where it says fiscal year 23 final budget report.
Got it.
So you'll see some of those reds where we went over, and then go to page 2, the next page of attachment A,
Okay.
and account code 7500 prior year's fund balance. We just plug the number in there so that the net surplus is 0. So we're showing you there, next page, Mark. Oh yeah, there's the local budget that was changed and should have stayed the same as DSpace.
In
And-
reality, they're both 20% of the same number, and somewhere in the spreadsheets, that number got manipulated. So that we'll fix that when we bring this to the board, so that that number is the correct number. And therefore you won't see the 111% of budget.
Do you know what the correct number is?
$4,101,237.
Same as the DSpace above.
And the reason why the numbers that we actually expended are just a hair lower is that revenues came in 0.02% lower than projected.
Okay, thanks.
I have a question about the same box. I don't know if you want to take them now or wait. I have a lot of questions. So I want to signal the committee that I probably will ask questions for a while, but I can parse them out into groups, or I can focus on this box at the moment.
What would you guys like? I mean, would it make sense? I think it makes sense sort of just to go through the questions and help us work through the information that was provided. That'd be great. From my view, Dan, if you'd like to do that.
Okay, well, first on the narrative, I just want to make a comment. I'm not familiar with the concept of bringing up, and I apologize to the whole committee. I realize we did this last year. I think it's taken me 2 years of paying a little more attention to sort of reflect on the way it's operating, but I'm not familiar with the idea of calling the adopted budget in June a preliminary budget, and then suggesting that what I would call a budget amendment in the fall is a final budget. That I'm not familiar with an agency that does that. Maybe you are, but that's not how my agency would label these things. The board adopted a budget that went through the JPA's budget process in June. And you're now suggesting, based on the close, which you don't have an audit for, you just have the close, that you want to amend the budget. So I want to put that up front because I think this terminology starts to matter. The second thing is on this box,
Wait, let's pause. Let's take each one. Otherwise, I think it might.
that's
be-
just a comment.
Well, I think there is a response to it.
The response would be is that my apologies, the May budget, we consider our final budget, and this is amending the final budget.
Yeah, but that's not what the document says. So you gotta work
So
on
we'll
the
fix that.
terms.
You're right. We'll
I
fix it.
can, if I may speak to that, because I did the headers at Southern Fire, that's the way that we do it, because the state does not require that you pass a final budget until October. So we pass one in June so that we can start spending, and then we call the one in October the final budget, because that's when it's required. But I can change that going forward.
Okay. Okay, so this box, at least if I understand what you're saying in the narrative, you're treating your fund balance as a cash pot, right? And so you have some amount of cash that you're carrying from prior fiscal year. So I don't know if that's just excess cash that has been designated to a reserve and it's sitting as a fund balance. Okay. Then it says you netted the deficit, which I see in your math, But if you did that, that means all of these accounts that had unspent balance got wiped out in the net. That cash is gone. And I think we are mixing up the concept of cash and budget. And that is a really bad habit, because there's a big difference between saying at the end of the year, I reconciled cash and I took an unspent amount of money from a particular account and I used it to cure a net deficit. And then what's sort of coming into this budget proposal, which is to give these accounts the amount they didn't spend, even though you did spend it because you spent it to cure the deficit. That's how I read the document. So I'd like some clarity on that from an accounting standpoint.
Let me just make sure first. Does everyone understand where the concern is? Yeah, okay. All right.
Yeah, I-
Go ahead, Lisa.
I'll try to speak to that as best I can and definitely keep chiming in if it doesn't make sense. But I just put that there in the budget as the prior year fund balance to give a sense of what was spent that above, so that there it shows no deficit, but it's showing that we went into prior year unspent funds to fund this year's expenditures.
Okay, so you went into your cash reserve to
Yeah.
fund a deficit to resolve in the fiscal year closed.
Exactly.
And you've already done that, or you're waiting for authorization?
We had authorization at last year's October Finance Committee meeting and then board meeting to roll those funds that were underspent for those projects. They were moved over into the fiscal year 22-23's projects.
That's what I asked, Mark. I asked who gave the authorization to address the deficit by spending cash? Who has the authority?
The board did in October of last year.
Yeah.
Board said in October, no matter what happens on June 30 of 23, you can take excess cash and apply it to the deficit.
For the projects that were identified in the October rollover staff report.
Okay. Again, I think we are I think if you put all the city finance directors in the room, they're going to question the way that cash is being managed against budget. You're not managing cash, you're treating budget like cash, and it's not. And I'm concerned about that. I do think there should be some discussion going forward and bring in some folks who do this to talk about whether or not that's going to serve the agency well going forward.
I would be happy to talk with some people. I do want to point out that on that budget report, you can see there is a budgeted number of what we estimated we would use. So next to in the prior year fund balance, 2.3 million, the budgeted amount was 4.1 that the board approved. And we could just as easily not put that there, and then this report would show a deficit, and then the system would automatically make that entry against the fund balance once June 30th passed. So it's just a visual to show a zero deficit. I don't have to do that, and I'm happy to take other suggestions. But that's the way we did it, and that's why.
I think Jason's had his hand up. Jason, did you have a question or comment?
Yeah, I'm wondering if the thought of operationalizing this concept where you commit the funds, the fiscal year, the projects identified, and that project balance can carry forward over multiple fiscal years, because this is normal for these projects to go on beyond the single fiscal year. But, and maybe I'm not understanding this correctly, but it seems like instead of capturing that, identifying it as a project, committing the funds to it, almost like you do a purchase order in a year, that purchase order can then be, exercised, if you will, the following fiscal year. would that help operationalize this piece, or am I not connecting the dots here?
If I were starting from scratch, I would treat all these projects the way agencies treat a CIP. And I would have project year allocations, and I would not just roll money from one project year to the other. It's completely feasible to set it up so that if an agency got allocated money or a core project got allocated money in a particular project year, they could go to the board and say, I can't get that work done in that project year. Please hold that money in that account into the next year so I can finish the project. That's a common practice with a CIP. And I think that's what you're getting at, Jason.
But on our operations budget, that is exactly what we're doing. In fact, if you go down to this portion of the spreadsheet, you'll see, or of the staff report in the spreadsheet here, let me get down there and not make you guys dizzy, and use an example of the Greater Ross. No, that's probably not a good example. Let's see. Finding the best example to kind of.
Well, let's use
describe
that. I'll use one that strikes me. Let's use the Chipper Day program as an example.
Perfect. That's a good example. So
Okay.
let me.
So you didn't spend, if I read this chart correctly, your closeout tells you didn't spend 393,877 in the fiscal year that just closed.
Correct.
So your proposal is that the budget for the fiscal year 24 be what you told the board in May or June is what you need, plus what you didn't spend in the prior year.
Correct.
Because you believe you're going to be able to spend 1.6 million, or because you're just rolling money across the project?
We believe that the future years are going to increase in cost. And so when we built the 1.25, it was with an anticipation of the rollover from the.
So the
previous year.
problem with that approach is that this is basically an agency that's supposed to be allocating the money for competitive purposes around projects, right? So if you keep doing that, then the Chipper Day programs builds up this big account that it's never going to fully spend. And all those dollars are not being put to work for the taxpayers. They could easily, if you know you can only spend 1.2 million in this current fiscal year, that should be the budgeted amount for the Chipper program. And the 393,000 should go somewhere else and be put to work.
We understand that. And as we mature and see our pace, I see us doing mid-year or similar adjustments across projects. I'll use the grant program last year as an example. We exceeded the amount that was originally budgeted, and we've identified projects that we did not think would spend that in that fiscal year, and we moved monies from those projects over to the grant program. So we have shown that flexibility, but as we mature and start getting a little bit idea, like last year, the Greater Ross Valley Shaded Fuel Break was an example of our really identifying the pace and scale and the burn rate for those types of projects. So as we develop more data and understand how much work we can get done, we'll be able to be more flexible from year to year.
Well, I think the time to say we're maturing is now, because I asked you a question this morning. How much is the revenue that you've projected in the budget? And you said it's roughly 20 million, including grants.
I said 21 million minus grants.
Minus grants. Okay. So it's 21 million. How much is it with grants?
It depends on how much we request for reimbursement. We have a $2.5 million grant for the Greater Ross Valley Shaded Fuel Break. That's a 36-month grant. And then we have 750,000 remaining in our Greater Ross Valley Shaded Fuel Break. It's dependent upon how much we request for reimbursements for that fiscal year.
So the way you're structuring the budget, you're asking the committee and then the board to approve a $4 million deficit with the belief that some amount will be offset by grants.
I do not believe we're asking for a deficit.
No, that's not.
It says 24 million, right, as the bottom number for this, for all of the expenditures?
That would be inclusive of the rollovers that we are asking for from fiscal year 22, 23 to 23, 24.
But the rollovers aren't cash, they're budget. That's the problem. They're not cash. They're budget. You are inflating the budget.
Can we, I want
Excuse
to
me,
pause
Ca-
for 1 second. I want Catherine to have an opportunity to ask her question.
It isn't a question. I wanted to address this. Yes, we approved it because we knew that these line items are like what's left over is dedicated to Chipper Day. So my understanding is, although it may be cash, it's dedicated to that particular program. We use the results of the previous year, as you understand. I'm not and obviously you have more expertise than I, but we use the results in order to be more accurate the coming year. But we have 17 entities. All of them are working at a different pace. I understand what you're saying about could something else more worthy be using that money? Well, I don't see it quite that way because we would bring it back to this committee and the board. Are you suggesting that we journal what the changes are?
I'm just suggesting that what the document's telling my limited understanding of budgeting and cash management is that Elisa is reconciling the deficit by applying these unspent amounts against the deficit. That's what net deficit says to me. So those, they're gone. They don't exist. They're not there to roll over. So what you're rolling over is budget capacity with no cash to back it up. That's what concerns me.
But we do have cash to back it up because it was left over from last year, right?
But that's not how you're reflecting this in a document, and nobody's making a conscious decision of how to manage excess revenue.
So Dan, can I ask at the so you're suggesting one option would be to anything that's not spent, I'm going to try just to put it in basic language. Anything not spent would go into a reserve. And at that point, those projects that did not fully spend, or, based on what they originally thought their budget was, did not fully spend that amount, then that reserve amount becomes available then to allocate and program differently if we choose to.
I think, again, if I were starting from scratch, the projects I would do the way most agencies I work with or have worked with would treat a CIP. You fund a project year and that money sits there. And if you need more than 1 year to get the project done, it's still there. It would never be reconciled against an operational deficit. It would stay in the project account. But the way the way I read this is, it's actually the cash is being pulled out of the project to help reconcile the deficit. But the budget's still being there with the assumption sometime down the road, enough cash is going to show up to fund this. Now, Alyssa's saying, well, it's fine because I've got a cash balance. But who's managing the cash balance and what policies are you putting over that? Or are we just going to keep inflating the budget? Because at some point that won't work. At some point, the budget, the way we're doing it, the budget will eventually inflate past the amount of cash. It just will. It's not mathematically possible. A great example in here is the legal services budget. Why is the legal services budget going up at all? Do we not know what
Projects are being introduced?
No, the legal services budget, what they've said is, let's take what we didn't spend in the prior fiscal year and increase the budget by that amount. There's no grounds for that. That's just saying we didn't spend money on legal services last year, so we should add that to this year's, and it's then budget. So you're adopting a bigger deficit than you need to adopt. Some of these things should be coming to the finance committee and the board in the spring when you start to see that, okay, here's why we're running into certain problems in certain line items. I suspect this is how your city council operates. I don't think your city council says, you know what, since the attorney didn't spend all the money we had put in the budget for him last year, we're going to go ahead and increase his budget by that amount next year. In the current year, you would deal with the problem that the legal services budget has exceeded the authority, that you've actually spent more than was in the budget.
But I think we would also potentially say that we anticipate that need of legal services is going to be needed in the future. It wasn't spent this year. It's going to be spent in the following year because those projects are going to need it. And so we'd be allocating that amount. Maybe not, it would be a different amount, but it would be allocating an amount. I mean, I think I'm a little bit trying to figure out like why we're having this conversation now. But it's okay, because maybe we need to look at this differently now that we're in this year. But I'm also curious, did this come up through the audit at all? And did any of the auditors bring up the question around this?
No, they did not.
But that's not a valid question. I'm sorry, because that's not what auditors would not even look at this. All they'd be handed is the adopted budget. So all they're being handed is whatever was adopted. And then they're making sure that expenditures reconcile against the adopted budget. This is a fundamental question about budgeting practices and the management of cash.
So the risk so just put it in terms of, so the risk you're suggesting, if we keep continuing down this path of reporting, what would be the biggest risk that we'd be facing is that we are overinflating our budget funds? Is that the risk that you're suggesting, or that that we're potentially allocating funds into line items that may or may not be needed?
If you keep going down this path, there's going to come a year where people are going to actually spend all this budget authority you've given them. It's the same equivalent as if every time the credit card company gives you more credit. And if you go spend all that credit and you exceed your ability to pay your credit card bill, you have a problem. That will eventually happen if we stay on this path. If every year you say, we use that cash, but we're letting you have more spending authority. Because that's what this says. We used the cash to cure the deficit, but we're also going to give you more spending authority. That's not sustainable.
But don't we already receive those tax funds on a pretty stable point?
To 20 million.
To 20 million plus the rollover is funds that we haven't spent.
But
of
that's
a previous
but that's
year.
my point. They did spend it. They spent it
we did
to
not
address
spend
the
it.
debt. Yes, you did. The way you wrote this, you did. If you didn't, you need to write this differently.
Okay, well, we can definitely fix writing it differently, but these are monies that did not get spent. There were monies, so in 21, 22, there were monies that did not get spent.
Except Alyssa's saying she used it to cure the deficit. That's spending cash. You got to get out of budget mentality and into cash mentality. They're different.
If I may speak to two things you've brought up. One, the board did approve putting $3 million in a reserve fund. And then in addition to that, there's $4 million in the general fund. That cash is managed by the County of Marin, which we have looked into as offering very good in terms of yield, risk, and liquidity. So that's who's managing the cash. And there is a lot of cash left over from prior years. That was the problem. Well, not the problem, but that was the situation the first couple of years that the MWPA was into being, is that we weren't spending what we had budgeted. So Mark can speak more to this, but I imagine we underspent. We're making up for past years, and then it will even out. The spending will even out. We're not going to continually have deficit spending, but we have millions of dollars in surplus from the first couple of years of operations. There's
And
not.
if we continue receiving grants, we've budgeted assuming we don't receive the grants. If we receive within our capacity, if we receive the grants, there's potential that those that will continue to have additional funds that are potentially rolled over because of the grant, but it's really contingent on the receiving those grants. Is that right?
That is correct. And let's have Jason go, and then I
Okay.
might be able to.
I think we're trying to solve something that can be resolved offline. I would say this is not traditionally how budgets are presented in most municipalities. Certainly cities, towns, others that are familiar with this. I don't think there's any disagreement in the fact that the funds are going towards their intended purpose. And we should be clear with the public about that. It's just how it's being presented. And I think if we got a little work group offline and propose some adjustments, I think it would be easier for all of us that are used to looking at called traditional municipal budgets and how that's carried out to mimic this. And it doesn't change a whole lot. And I think it would just be easier to follow for everyone. So I would suggest, instead of trying to fix it during this meeting, that we get a little work group. I think Dan offered participation. We could have some other finance folks, and try to align what we've got here with maybe what's done standard across the other cities and towns, rather than trying to deal with this in today, unless if there's some urgency to moving this, or a time frame that we have to do this in, and try to figure it out right now online. I guess I'm online. You guys are in person.
I appreciate the recommendation. Thank you. Is that, yep?
I concur both with Dan and with Jason. I think this is a reporting issue and a process issue. There's no hint of misfeasance or mismanagement of the funds. And I think if we would put together a little bit of a study of this with the task force, I think it'd be a great outcome. I would suggest that we consider something along the lines of a sweep each year, where we take the excess cash that's been budgeted but unused and designate it in funnel it into some sort of an account that we can then draw from to close the gap or refund projects that weren't completed in the given year for which money was budgeted. That would give me some clarity, and I'd be able to track the funds. But this is still transparent. It's just, I think, not reported in a conventional sense. And that's I think the solution here.
And I do agree that it is very much a reporting issue, and that's what's creating the misunderstanding, I believe. When we look at our budget, let's kind of simplify this a little bit. The 20% are just straight pass-throughs to local and the D space. So now we have the 60% of which is our core, which virtually every single one of those projects really is a capital improvement project that we know is going to take more than the fiscal year. For the majority of the project will take more than the fiscal year. An example where it's not was in 2 fiscal years ago was an equipment purchase for Bolinas. They closed that out. That project did not move forward. It was a project that we knew was going to be within that year. But the evacuation route clearing for all 5 of our zones, those are capital improvement projects that are going to continue for the lifetime of the MWPA. So the operations committee and the advisory technical committee have been building projects designed around that, the evacuation route clearing happening every year. They also have other projects that they're budgeting for that fiscal year. So they see how much is available for them in there, and they are identifying how much they think they can spend in that fiscal year. Sometimes they can spend it, sometimes they can't, knowing that if they can't get to those projects, whether it was a workforce issue, couldn't get to the roads, they know that they're going to roll it over. So the vast majority of the budget that we're talking about are those capital improvement projects. And I totally agree. It's how we're wording it in the report. We aren't deficit spending. We're bringing money that we did not spend from one fiscal to the next for this capital improvement projects. Admin is a little bit different. Dan's completely right. We budgeted a certain amount. I'll use legal services as an example. We budgeted a certain amount that is based on the current workflow of our legal services with a 3% inflator for cost of living that our legal firms have in place for our contracts. The reason why we rolled over any unspent is because if we have any legal issues that come up as a surprise, then we have some contingency. A perfect example of that for this year was the legal work that we did for the amicus brief. So that allows us to expand upon what our regular daily or monthly burn rate is for our legal fees. And so that's why we adopted that strategy.
Okay. So
Swept that money into cash account.
I'm sorry, Tom, is there some?
So one option would be to create an account to flow the cash through. I agree. That's one way we could do this. I would love to see at least sit with a handful of city finance directors and particularly have a discussion of how project accounting is typically done and presented. I'm not don't take my questions to suggest that I think any dollars been lost. I just think the document in front of me is mixing up cash and budget, and they're very different, and they need to be presented differently. And one simple thing that's missing is we have the financial statements that are for 22, not 23. So I don't think we've ever seen a cash report. Are we getting regular cash reports, or is the board? Who's getting cash reports?
Those are in the monthly, every month it's in the board packet.
Okay, so I'll start looking for that there.
Yeah, and I'd be more than happy to sit down with some other people, anyone you recommend or.
But I just think, again, if you go to project year accounting for all of these projects, you'll actually be able to even better show. And you'll actually then empower Mark and the staff to challenge an agency. How much money do you really need in this project year? You didn't spend all the money in the last project year. And everybody be able to look at a sheet and we'd all understand what was going on a little better. And I am not saying that this isn't correct. Although I still stand by, I think you spent the money because you washed it through to net the deficit. And I think, again, that might be a terminology point, but.
No, we did spend the money. Yeah, I agree. And I'm more than happy to talk with you offline about this and get it more clear.
Okay.
So for this item, do we want to move it forward, or do we want to wait till we have a task force to look at the reporting issue? Dan, you've raised the question, and I do agree, it is a reporting conversation that we need to make sure. And again, we have enough data in history that it's the right time to be able to do this going forward. So we have the that it's clear, so there aren't any questions. But I don't know in terms of this staff report being the closeout and general fund rollover conversation, if it's not being reported the way we would like to think that it should be reported, do we want to pause on approving this?
Are any of these accounts insufficiently funded for the next couple months based on the adopted budget?
No, they're not.
So I don't think there's an urgency to do this amendment to the budget. So I would suggest we not approve this. And I'd be happy to work with Mark offline and Alyssa offline to at least address some of my concerns. The other question on procedural level, and I don't know if we talked about this last year, this is a budget amendment, and I haven't looked at the JPA document in a while. Shouldn't that go to ops before it goes to the board? Because isn't budget supposed to go through ops before it goes to the board?
I'll have to look at the process, but this is what we're basically doing is rolling the funds over from one fiscal to the within the projects, and we do connect with each of the zones and work with them on rolling those monies into there.
Okay. Last point. If we switch to project-based accounting, what you said is valid, but the way you're doing it, you're amending the 24 budget. And I think the amendment needs to go through ops if you do it that way. So I do think it's even more important that we talk about changing the way we're accounting the projects.
Okay.
So does it have an impact if we hold this until next time?
No, it doesn't.
Okay. Is everyone okay with that approach?
Could I just mention that if there are going to be any substantial reporting changes or procedural changes, we should keep in mind the ripple effect this could have on the local agencies that are reporting back to us how they're consuming the funds. And we wouldn't want to distort their finances in the course of altering our reporting process. I can just see that, well, I can't see it, but I can imagine that if I were a recipient of funds and was told that they'd been misreported by the agency who was dispersing the funds, that I may have to go back and alter my own financials to report that to my electeds. So just keep in mind, there could be ramifications from making any big
I
change.
agree with you, Tom. I think if the agency is effectively committed that each of these dollar amounts in the revised budget column is what these agencies should be planning is available to them. Whatever system we come up with for this fiscal year should honor that number. I fully agree with that.
And I just want to make sure we are just talking about a clarity on reporting. It's not a change of dollars per se, is what we just said. And it's not, there might be a process piece, but it's a reporting piece. Did I capture that correctly?
It could be a budget piece, because if you start to look at, if you want to use the legal services, if there's not an intention to spend that entire piece with the rollover, then there may be some discussion that it goes back to the board, that rollover piece be allocated into undesignated reserves or some other account for purpose. But if Mark and his team say, no, we anticipate spending whatever that full amount was, then I think it's a semantics issue a little bit, then a reporting thing, than a budget thing, but it may turn into a budget thing. But what I'm hearing Director Finn say is, look, we've committed the funds to these projects and to the agencies. That we have to hold true to, because people have budgeted, anticipated, and started projects based on that. It's really, I think, the other piece of it and how it's reported and how budget is handled, cash versus budget.
And to Chief Weber's point, there was payroll savings from admin from fiscal 22-23 that we are recommending to roll into operations of 23-24. So we aren't just flat rolling over every single amount. We are actually, if we feel we are not going to, especially in the admin budget, if we are not going to spend that money, then we are moving it into a different account or a different project. And we actually did that in some of the core projects where certain projects were completed, did not expend all the funds, and that was moved. The recommendation is to move it to another core project.
Right.
But that's exactly what should be the subject of a report in some way, so that can be tracked.
Okay. Any further questions or comments on this item?
My only other comment would be, I think a future agenda item should be discussing what's an appropriate amount of fund balance. Because 4 million is a awfully large fund balance. If your reserves, what did you say it was 3, Alyssa?
Yeah, our restricted reserve is 3 million. The 4 million the fund balance for that is because we feel that we need the 4 million to get through July 1 through December, when we get our first tax dump from the county.
Well, again, we can have this offline. That's a cash management statement, not a budget statement. These are big differences. And they're important to me that we talk about it, that there should be a policy around the amount of cash we're carrying and why.
Okay.
All right. So we'll table this one, take it back. Dan and Mark, Jason and Melissa will get together, it sounds like, in terms of talking and bringing in another group of financial experts from the cities to work on reporting. Is that it on that one?
I'm not a budget person, but I know a lot of good budget people.
All right, you can add the budget people. Okay. All right, then we will table that, and we will now, do we want to open that to public comment, or since I don't know.
We will need to vote to table it.
Vote to table. Okay. So recommendation.
I think you're not, sorry, now I gotta be parliamentarian. We're not tabling it. We're postponing it or carrying it forward to another agenda. Right? We table it, it's over, and then you have.
Postponing.
Postponing, fair enough.
Yeah.
Yes.
So I think, which I don't know. I don't know, did we adopt Roberts? Because if we didn't, you don't actually need to, you could take staff direction.
We did not adopt Roberts. We did Rosenberg's.
Great. Rosenberg says you just got direction. I don't
Okay.
think Rachel needs a call for a vote.
Good enough. Thank you.
right.
Appreciate that.
Okay. Then we are moving forward, I think. All right, we're going to talk about the fiscal year 2021, 2022 financial audit.
Absolutely. And apologies for the delay once again that here we are, we've closed out 22-23, and now we are looking at 21-22's audit. I'm not 100% sure why we continue. Maybe it's because we're one of the newer companies or newer agencies that this company is auditing, so we have fallen low on the queue. However, I do feel that we have a fairly simple audit. It did come back clean as far as administrative practices. One of the findings from the last audit was that we did not have enough degrees of separation from approval of expenditures to the person actually cutting the check. Because at the time, we only had 2 people that were involved, and that was Elisa and myself, and then with board members as a second signator. We have amended our process. We have Lauren Wolf that works for Elisa. We have Elisa tracking the expenditures. And then it's Martina who receives the invoices. She researches to make sure that the invoice should be spent. And then she passes that along to Lauren through our accounts receivable process and payable. And then Elisa, Lauren puts together the check run. I go through and approve each and every check and confirm that we have the process is properly in place as far as approvals. And then we have one of our other co-signers sign on with that. Based on that process, the auditor was good with that change, that the lack of separation or segregation of duties was not a finding this year. Going through the analysis, I can read the numbers to you, but I think you guys are all have been through these types of reports before. As Dan mentioned, our net fund balance is actually quite strong. And the simplicity of our organization is that we don't have very many liabilities. Our liabilities are essentially time off that's been accrued. We don't have any assets that we are paying loans on. So it really is a pretty simple audit. So with that, I'll take any questions. And one of the questions I would have of you, and it might be short notice, but when we do bring it to the board, do we want to have Bodwally and Associates come and present the audit?
Okay, so I'll open it up to the committee. Any questions for Mark on the audit?
I welcome Badawi and Associates to come
Okay.
and present. Mr. Badawi has audited other agencies on which I serve on the board, and I think he does a really nice job when he comes to answer questions, and I think that would be helpful.
We'll reach out to him.
Yeah, I agree. Makes sense.
And I wanted to chime in. As a small agency, we get that ding every year
Do you?
about separations, and it's just the reality of being a small agency. You
Don't have very
can't
many.
you can't actually meet that threshold without hiring people. And it's not which we just decided isn't the best solution. And I completely understand that you got that concern from the auditor, and you'll keep getting it, and that's okay.
Yeah.
I suspect part of it is, I bet Alyssa's a super user too. I know they don't like when there's someone who can do has the authority to do everything. It's just the way it is.
Yep.
Small
They
agency.
suggested at some point that I have like one of the board members reconcile the bank. And I was like, are you kidding me? That's the best part. I have to reconcile it. So they're okay with where we are.
All right, great, thank you. Any other comments, suggestions? All right. We'll open that up to public comment.
If there are any members of the public who wish to speak, please raise their hand or press *9 and press *6 when unmuted, or to unmute when called on. And we have no public comments.
All right. Okay,
If I could just say one thing, because to make sure on the record, I don't view budgets as any sort of statement about whether agencies are managing their money correctly. I view audits or financial statements, and we should put a big underline that we have a very clean financial statement. The agency is managing its money very well. And my concerns about the way we're doing the budget is a long-term view of how we should operate, and not a statement about how we are managing taxpayer money. I encourage everyone to read the financial statement if they have any concern.
thank you for that. All right. If there's no other questions or comments on this, like a motion, please.
And the motion would be to recommend receipt of this and a report from Bonneville Associates to the board next meeting.
So moved.
Second.
All right. Got a first and a second. All in favor, roll call, please.
Sorry.
Director Finn.
Aye.
Director Goins,
Aye.
Director Hilliard,
Aye.
Director Kurtz,
Aye.
Member Schwartz,
Aye.
Chief Weber,
Aye.
and Director White. Aye.
Okay, very good. So that will move forward. Thank you. Any committee member requests regarding future agenda items? I think we have one already. Any other further comments, questions? Short meeting today. All right, thank you all. We will adjourn.
Thank you, everybody.
Thank you.
Thank you.